Good morning, all of you. Myself, Bhavesh Ganwani, and today I will give my views about the recent government initiative, both fiscal and monetary, to support Indian economic from COVID-19. So first, we have to understand what is fiscal policy. Fiscal policy is the means by which a government adjusts its spending levels and tax rate to monitor and influence of a nation economy. And second, what is monetary policy? Monetary policy is that policy adopted by the monetary authorities of a country that controls either by the interest rate payable on very short term borrowing on the money supply, often targeting inflation or the interest rate to ensure prices stability and general trust in the economy. Mix of both fiscal and monetary policy needed to salvage the economy. A combination of monetary as well fiscal policy measures are called for to salvage the economy from the collateral damage from the fallout the spread of coronavirus disease COVID-19. According to research report by the State Bank of India. On the monetary side, besides maintaining a proactive liquidity regime as well as facilitating stability in financial market through unconventional measures, the research report makes a case for a rate cut by the central bank to accommodate the possible surge in liquidity demand and shocks related prices increases. The RBI may also need to consider a degree of prudential forbearance in specific sectors like hotel, aviation, transport, metal, auto components and textile. It said the central banks should make use of the current situation to incentivize digital payment, give the risk of using currency notes in times of pandemic. The output in economic is expected to slow down on account of both demand side and account of and supply side factors. On the demand side, an operability analysis for three sectors, namely transport, tourism, and hotels, show significant impact on demand and hence output. The SBI research team estimate that the impact of a 5% in operability shocks could be 90 basis points of a GDP from trade, hotels, and transport to transport, storage, and communication segment, and could be spread over financial year 20 and 21, with a large impact in financial year 21. On the supply side, China is an important source for critical inputs for many sectors. Supply shock is a key of higher prices of input which in turn affects the prices of all the commodities of the supply chain. A simultaneous demand and supply shock to the economic will also the implication for the banking sector. On the fiscal side, a nearly 30% fall in crude oil prices could lower the petrol prices by rupees 12 per litre and diesel prices by rupees 10 per litre in India from their present prices. The additional revenue accruing to center from increasing the excise duty rupees 35,000 to rupees 40,000 crore could be spent on providing relief to people at the lower strata who will lose income because of shutdown in commercial activity in states. Package to support economic in the works. The government is working on a package to support the economic facing the brunt of the COVID-19 outbreak that would include measures to address potential non-performing loan issue as business are shuttered to contain the risk. The government is ready to relax the fiscal goals to provide more funds to support the stressed sector in the economy. Steps will be firmed up over in the next few days, a government source said. Steps are being worked out. It's an unprecedented situation. All that is needed will be done, the official said. Prime Minister Office, Finance Ministry, and regulator have been in touch and all possible steps immediately needed are on the agenda. Situation is being closely watched. Deliberations are going at various levels, another person said. A fund or a line of credit to immediately provide some aid to service sector could be looked at along with other relaxation on the taxation side. The measures will also address the issue of sectors and industry not in position to repay loans and interest because of shutdown of their business. Changes on the taxation side could be taken up with the reply to the finance bill likely on Monday. In most states, malls, restaurants, eateries, and cinemas have been shut till March 31, while the hospitality and transport sector have been hit because of travel curbs. This sector will face serious stress in paying salaries and meeting other payments obligations. The government has set up a task force under Finance Minister Nirmala Sitharaman to take measures to support the economy. The task force will hold its first round of discussion with stakeholders on Friday. A relaxation in fiscal deficit would give the government resources needed to support economic 1 percentage point reduction in fiscal deficit goal, can approximately provide as much as 2.2 lakh crore funds. The amount 3 per litre rise in excise duty on petrol and diesel will also add to funds available to the government. The industry will petition the government for relief. We will ask for things like perhaps non-performing asset dates to be extended by another 6 months, moratorium on loan repayment, especially for small companies and businesses. The Reserve Bank should come up with a comprehensive forbearance scheme for sectors that are being impacted and are starting at job losses like aviation, textile, hotels, restaurants, automobiles, and food processing. Group Chief Economic Advisor of the State Bank of India.